a graduate of the University of Pennsylvania. I also did some training at Boston University, the University of Rochester, and the University of Miami. I'm a former professor at Jefferson University in Philadelphia. That was from 1988 through 1991. I've been involved in the financial markets for over 20 years, and I began trading the futures and Forex markets about 10 years ago, at which time I became involved in the optimization of different software systems. And one thing that I found when I looked at software systems that I purchased and others that I evaluated was that they did not work for me. They didn't provide me with exact low-risk entries that had a high probability of hitting my first target. Essentially, the majority of them were anticipatory momentum breakout systems that did well in a trending market, but prefer chop. And since markets are in chop 70% of the time, this is problematic. This is when you want to avoid taking trades, and when you want a software system to be able to kind of clue you in that the market is in chop and to stay away from entering any trades. The other thing was that software systems that were available really based their entries on either having a sensitive trigger or a specific trigger, and they did not let me know which of the two they lean towards. Now, if a software system has a sensitive trade trigger, then you're going to get into a lot of winning trades early, but it's also going to drag you into many losers, and those are the false breakouts. The ones that have a specific trade trigger will get you into fewer false breakouts, but the price you pay for that is that you get into winning trades late. So what I did was I did an extensive amount of reading on lots of different subjects, including Elliott wave and Fibonacci, and really all of the different indicators that we use to try to give us an edge on the market. And I came across a book by Alexander Elder, which is called Trading for a Living. It's still available on Amazon. You can get a used copy of it, actually. And he sort of was my icon / mentor for developing the right line trading system. And he defined certain parameters that software must contain in order to optimize the accuracy of your trading entries. And he felt that any software, in order to provide you with the maximal edge possible, must contain at least one oscillator. Now, he did not specifically recommend any specific oscillator. It did not matter whether it was relative strength, whether it was a fast stochastic or slow stochastic, whether it was the CCI. But the way that all oscillators work is they simply look, the way they crunch numbers is they rely on the relationship between the high of the move to the close of the move. And as the close of the move approaches the high of the move, or the close of the move approaches the low of the move in a short call, the oscillator is going to fall or rise respectively. They all crunch numbers similarly, and that's the relationship they look at. He felt that that specific type of indicator is required as part of your indicator package. In addition, he felt that some MACD-based indicator was also extremely important. And all MACD-based indicators work the same. There's a signal line, and then there's a fast-moving average. As the fast-moving average breaks away and accelerates away from the signal line, then momentum is rising and the trade is likely to move to the upside. When the fast-moving average is accelerating towards the signal line, then momentum is falling and the trade is likely to move down. His third component was volume. And back in the 1990s when he wrote the book, we didn't have such sophisticated types of parameters such as order flow. So what I have done on our software is to remove volume and add order flow instead. And the fifth component that I have added, which I found to be extremely important, is that of market structure. I think your software has to provide you with a sense of where you are and provide you with market structure analysis. And that's what right line trading software does. It's going to give you in real time an analysis of market structure and tell you when market structure lends itself towards a long trade or lends itself towards a short trade. In addition, for a long time, I traded with multiple screens. I am partial to range bars simply because range bars allow me to determine where the candle's going to close almost at the open. It gives me a great idea of where I'm going to put a buy limit or a sell limit before the candle is fully formed. But trading with multiple time frames is very, very cumbersome and difficult, and it requires multiple screens, and you can miss a lot of trades. So what I did was I had my indicators analyze data from multiple time frames. So many of the right line trading indicators perform fractal analysis. They assimilate data from multiple time frames, which alleviate you from having the burden of having to look at multiple screens, but they provide you with the advantage of having the information of what is going on higher time frames. So the goal of my software was to combine oscillator analysis, MACD analysis, volume analysis, order flow analysis, market structure analysis, and fractal analysis into a simple platform that provides you with remarkably accurate trading entries and make the platform very intuitive, not difficult to interpret, and very easy to see where you're going to take a trade. And really, what I believe is one of the strongest features of Rightline is that we provide you with exact entries. And you'll see as I move forward in the presentation, we don't just define areas, we give you the exact optimal entry, both long and short, where we think that the predictive value of a trade is going to be 90% or greater. Now, the first indicator I want to show you is our three-line indicator. And you can see that there are three lines. And I'm not sure if you can see my cursor or not, or my pointer. But the first line is order flow. Now, this assesses order flow on multiple time frames. And when order flow is down on all time frames, the line is red. When order flow is down on your longer time frames, but up on your shorter time frames, it's orange. Now, this is true of all three lines. And let me before I start talking about the color, let me define what the three lines are assessing. The first line is order flow. The second line is stochastic, and the third line is momentum. So when the line is red on all time frames, you've got a very, very strong, you know that market sentiment is very strong to the downside. When it's orange, you know that it's strong on the longer time frames, but it's up on the shorter time frames. Now we believe that the longer time frames rule. They're more powerful than your shorter term trends. So if you're looking to take a short, you can take that on an orange colored three line. If the line is green, then you have order flow, stochastic, and momentum in your direction on all time frames. And if the line is blue, then you have long-term order flow, stochastic, and momentum in your direction. But short term, you have these three parameters moving short. And you still can take a long trade if the color is blue, just like green. And again, you can take a short trade if the color is red or the color is orange. Now, I wanted to show you basically. This is a very, very simplified platform, but I wanted to make it even easier. Now, the thicker line moving through the middle is simply a 50-period simple moving average. Nothing fancy. When it's bending down, it's red, and when it's angled up, it's green. The faster line moving through it, I call the right line trend line, and that's a proprietary line. It's sort of a 15-period moving average, but if you overlay a 15-period exponential or a 15 simple, you'll see that it's quite a bit different, and they will sometimes be below and sometimes be above the line. What I wanted to do was create a line that had a lot of inertia, so that when it started to move down, you knew that when the modified 15 crossed the 50 to the downside, you had a lot of momentum to the short side. And when the modified 15 crossed the 50 to the upside, you had a lot of momentum to the long side. I did not want the line to be affected by a lot of whipsaw and a lot of random market movement. So as you can see towards the right of the screen, where you start getting the market, where the market becomes choppier, you can see that the right line trend line turns to yellow. And we never trade a yellow right line trend line. We only trade it when it's red. Now, getting back to the 3 line, what I did was to make it even easier for you to trade it, is when order flow, stochastic, and momentum are all to the downside, the candles will be rimmed in, I have selected yellow. So you can see the second candle that breaks the 50 to the downside, and I'm not sure that you can see my cursor. So I'm trying to, to define the area, okay, as easily as I can. When this candle forms, you can see it's, now the color that the candle is going to be rimmed in is up to you. You can encircle that candle in any color you like. You can make it any thickness you like. But that's a way of looking directly at price action and not having to divert your eyes from what's going on with price, and knowing that the 3 line, order flow, stochastic, and momentum are all in your favor. And we have a specific trade trigger we use. This is not it. I just wanted to show you just a broad market setup using the 3 line. But this, I think, makes it a little more helpful in seeing what the 3 line is doing at any given moment. Now, the way I have my candles are when I have order flow, stochastic, and momentum to the upside, I have them rimmed in blue. And you can see that right here. See these candles blue, rimmed in blue. And these are candles where order flow, stochastic, and momentum are all in your direction to the upside. Now, I think that order flow is a very, very powerful instrument, and it's very, very helpful in trading. And we always like to trade with order flow, especially order flow done on multiple time frames. So I wanted to leverage order flow only in direction, but also by looking at its symmetry in any given candle. So order flow is determined on a tick-by-tick basis. And now we use the NinjaTrader platform, and NinjaTrader gives you executed buys and executed sells on a tick-by-tick basis. So now all the indicators on right line work intra-bar, which I think is very, very important. I mean, you want to know that a trade is signaling intra-bar so you can get your buy limit or sell limit order in, and know if the candle, say it's a short call, it's going to close to the downside, it's going to take your sell limit order. The only one that does not is order flow asymmetry. And what order flow asymmetry tells you is it's signaling right here on this candle. And it's signaling with its triangle, and it's telling you that most of the people who have sold this candle are at the bottom of the candle. So they're hedging that this market is going to continue to the downside. And if it does not continue to the downside, the traders who are going to get stopped out the fastest. So when traders, specifically institutions, start placing their trades heavily on one end of the candle, you have a much better idea that the trend is going to continue. And at the close of the candle, if there is significant order flow asymmetry, you're going to see this signal. Now, this calls really, really nice tops and bottoms, but at Right Line Trading, we are purely trend traders. I do not believe in calling a top nor calling a bottom. Today on crude oil, we made over 75 ticks, and I'm going to show you that simply by taking very, very conservative trend trades. So we leverage the order flow asymmetry indicator in a way that helps us with our trend trading, and I'm going to show you exactly how we do it. Now this is actually showing a couple of things. We also have an indicator that shows you an ABC setup, and that is purely a structural setup. Now, an A is defined and will start to flash when any two candles of the same color occur in continuity. That defines a trend. So you get the A, and this is all occurring live. I didn't type these A's or these B's or these C's in. The software is doing all this work. So two green candles, two red candles, you get an A. Now, as the market continues to move up, you look for a pullback, and the B is going to start to flash as soon as there's a pullback in an uptrend or a pull down. I'm sorry, a pullback in an uptrend and a pull down in a downtrend. And when the pullback closes, when the candle closes, there's going to be an audible alert. So, because a B is a key formation, and it's one where you want to be given the heads up on if you're trading multiple instruments, because it tells you that there's a potential for a C, and the C is your entry candle. Now you're going to enter the C one tick above the close to the long side, or one tick below the close to the short side, so you know your exact entry. Now, the B can come with or without order flow asymmetry. When you get order flow asymmetry, this tells you that most of the people in the short candle are at the bottom of the candle. So when the C engulfs it to the upside, it's going to be pushed up into your first target by two forces. One is the addition of more buyers as they come into the market, and two, by all the people caught in this failed counter trend move being stopped out. So this is a powerful market structure setup. We only take these when we're above the SMA 50, above the right line trend line, and the right line trend line is green. Remember, we're only trend traders. So we're moving to the upside. We're in one tick above the C, and this is not a huge move, but listen, what we look for is the predictive value on every trade of hitting our first target. If that's our goal, we will get our 20, 30, and 40 tick trades. Now, I just want to make it clear right now that this system is just as good for Forex, and it's just as good for stocks. I have a lot of people who use it to trade stocks and also use it as a vehicle to determine the direction of a stock, therefore to trade an option. Now, the same signal occurs again later on in the trend. And the market comes down, moves up again. You get another B pullback in a long trade. At the close of this, you see the B flashing. At the close, you get an audible alert. You then see that you have a potential for a C. The range maker, the right line range maker, is going to tell you exactly where the close is going to be to the upside. You have your buy limit sitting there and waiting. when it kicks you in and triggers, the C candle will form in print, and up you go. So we use order flow asymmetry to help us push a trade, a long trade or a short trade, by catching people in a failed counter trend move. Now here's just a little broader example of order flow asymmetry used to help us get into a trade. And we don't use this as an entry signal very often, but I wanted to show you that it can be used, and it works quite well. As long as you're below the 50, the right line trend line is red, you get an order flow signal to the short side. It means people are strong to the downside in this candle. You're in one tick below, and you see with the next candle, you have order flow, stochastic, and momentum rolling in your direction. And with all of those things, there's a great chance that this trade is going to continue to the short side. Now here's just a pure market structure setup. There's no order flow required. We're simply looking for an entry based on market structure analysis, and the software does all of that for you. As I mentioned, here's your short signal. Here's your pull-up in a short trade. I simply have elected to create the magenta color on my pull-up candles or my pull-down candles. You can have these candles colored any color you like. You get an audible alert. The C engulfs it to the downside. You're in one tick below the close of the C, and down you go. Now, and as I mentioned before, all of these A's, B's, and C's are generated automatically by the software. I didn't type any of these in. Now, if the C can't, none of these indicators also repaint. If this C formed and printed and then got overrun to the upside, you would see it as a losing trade. Here I want, again, to give you a little bit more of a perspective. You have a market where you're below the 50. Optimally, you'd like the 50 to be trending down. You'd like the right line trend line to be red and down. You'd like the SMA 50 to be red and down. You have a market crossing the 50 to the downside. It pulls up. I'm going to talk about these entries later. Then it comes down, pulls right into the 15. Now, these are our bread and butter trades, and I am telling you the positive predictive value of a success on these trades is 90% or greater when they come right off this modified 15. You get a perfect C candle entry. Your exact entry is one tick below the close of the C. You know this long before where your entry is, long before the candle is closed. Now, as the candle forms, you may have to move it up a tick or down a tick, but you have that sell limit order in, and you wait for the C candle to print. So you don't have to deal with slippage or trying to guess where your entry is like you do with time charts or tick charts, although the system works great on time charts and tick charts as well. It's just my preference to trade with range bars. Now here is, again, the same structure, and I don't want to be redundant, but this is the same thing that you see over and over again in a given day on the market. Now, I trade crude oil, and crude oil is very volatile, but if you stay conservative and you take your perfect market structure setups, you get them over and over again, and really they're successful over and over again. Again, below the 50, right line trend line is red and heading down. This is a great C candle. This is an order flow signal. This is a more conservative entry because the deeper you are into the right line trend line, when you come off of it, the higher the probability there is for a win. As you start to move off of that trend line, you start to develop a little bit of incremental risk. Now, you can see the 3 line below on the C candle. You have order flow, stochastic, and momentum in your direction. And on order flow, you have also at the close of the candle, you have order flow, stochastic, and momentum in your direction, and you also have order flow asymmetry as well. So you have a lot of things working for you on both these trades. And you always want to trade with order flow. You'd like to trade with momentum. Occasionally, stochastic can be overbought or oversold. If you have order flow and momentum and everything else structurally perfect, you can occasionally trade against that middle line. Now, this is what's called our power entry. Now, our power entry is another form of regression trade. And really, a C candle is a pullback and then a move back into the trend. And that's what these power entries are. They guarantee you, based on the logic of the indicator, that the downtrend is intact. And what you can see visually is the fact that, again, you're below the 50, the right line trend line is red and heading down. Now, you're going to see these arrows flash intra-bar. So you know that they're coming. You have your sell limit waiting, and down you go. And what makes both of these entries so conservative is you're trading right off the 15. The modified 15, honestly, is really a terrific barometer of risk. And when you trade directly off of it, and you take a system-generated signal, the probability of a successful trade is exceedingly high. Now, we also have a momentum entry. Now, momentum signal, and this is why I always recommend that if you decide to evaluate the software, you trade one instrument, because you get a lot of potential entries, and you only want to take your most conservative, and after a while they become very, very obvious. I mean, it's a very, very intuitively based system. But momentum can come in two forms. And this is a fractal indicator that reads information from 3 different time frames. On my 8 range, it's reading from my 8, which is my trading chart, the 13 range, and the 18 range. On some markets, I change that to an 8 range, a 13 range, and a 21 range. So as the market comes up, enough candles, you're always going to get momentum aligning. And that's just a momentum chase signal. And we do not do anticipatory breakouts, because those are what doom you to failure ultimately and deplete your account. Systems that try to anticipate breakouts ultimately don't work. So we don't chase momentum to the upside, and I call this a momentum chase signal. 4 green candles in a row, momentum signals. Well, so what? We know it's going to signal. What we wait for is a pullback and then momentum to fire. And the right line trend line, as always, has got to be green above the 50, just like it is here on candle close. You're in 1 tick above for a long. The same thing happens again. Now you're on a 10-tick stop, so you're going to get stopped out. The market goes up. It comes back on a red candle, moves laterally towards the 15. You get a momentum signal, and up you go. And we had a great signal today on crude oil. I think it was good for 13 or 14 ticks on just this setup. Sideways movement into the modified 15 triggers a momentum signal. In other words, let momentum chase you. You don't chase momentum. And you're going to see how powerful that momentum sweeps these trades up or sweeps them down. Now, I wanted to show you, again, because I think it's very, very important to see 2 different kinds of momentum signals. One is simply the momentum chase to the upside. Now, you can chase it. In this particular case, it would have been a successful trade because you're above the 50 and above the 15, and that's just a very powerful structural setup. And if you look down, you have order flow and you have momentum in your favor. And so you have a lot going for you on just going long above the top of this candle. This is not one of our playbook entries. We don't chase momentum. We let the move break out, take the pullback or the lateral move right off the modified 15, and this momentum signal took this thing up, I think, for about 60 ticks. Now, it doesn't make any difference to me whether your entry goes 60 ticks or whether it goes 7 ticks. The key is you want to go 6. That is our first target, and that is what we base all of our analysis on. We don't care how many winners we take. What we care is how many losers we take. And that's really something, that's really a question that a lot of people who day trade, swing trade, Forex futures, stocks, options, they ask the wrong question. And the question they ask is, well, how many winners do you take? Really, the key question is, how many losers do you take? Because that's what defines a good day. I mean, there are days where I've made 80 and 90 ticks, but if I take 3 or 4 losers to make 90 ticks, that's not a great day. If I make 50 ticks and I don't have any losers, that's a tremendous day. So simply accumulating ticks and using that as a barometer for how successful you are doesn't really make it. What makes it is taking the conservative trades, avoiding the losses, and trading right off the modified 15 when you're above the 50, above the 15, and you move to the upside. Now here's another entry that we have. Now this is called our 3-line break. And what it is when a candle crosses the 50. Now the 50's got to be green and to the upside. Now this is the only time when we don't wait for a trade, when we don't wait for the modified 15 to cross the 50 to the upside, because this actually is the only anticipatory breakout that we have. But it comes with such tremendous market sentiment, and I've looked at hundreds of these entries, and these have a very high predictive value of getting to your first target, and oftentimes they will presage the huge market breakout, because you don't get many of these signals. And that's when the candle is rimmed in blue in this case, so you know that order flow, stochastic, and momentum are with you. You can see that the SMA 50, this simple 50-period moving average, is green and to the upside at the close of the candle. Now we define the break of a moving average is when 2/3 of the candle closes above the moving average, and you can see we have that here. Now what's also important, even though the right line trend line is not above the 50, is that it's green and heading up. If it's red and heading down, we don't take this trade. So when all of those parameters are intact and all of these things align, then the 3-line break becomes a very, very powerful move, breakout move. And the probability that you're going to get to your first target is exceedingly, exceedingly high. Now here's another signal. 3-line break. In this particular case, this is not really a trade I would take. When I made this JPEG, I didn't notice it. The SMA 50 is heading down. We need that to be up, but everything else works. This is not a trade we would take, and I just want to point that out. We need the SMA 50 green, but the right line trend line is green. It's moving up nicely. You're above the 50. This candle breaks the SMA 50 on a 3-line, and you can see, I believe it got you up to here. I don't believe this came back 10. If it did, it gave you a more modest trade, but the key is it gave you a winning trade. Here's another call. I made the candle outline much thicker because I really wanted to make it clear that how important it is that you get this candle outline and you get the 3-line signal on this break of the 50. Now again, you can make this as thick as you like. Here's a great trade to the short side. SMA 50 is heading down. 3-line break, clean break of the 50. You're in 1 tick below the close of the candle, and remember, this is all flashing intrabar. You can see as this candle is forming, and as it presses down, you'll see that yellow outline forming. None of this is just a candle close signal where you got to rush your entry in, and a lot of times it's going to skid past you, or you're going to lose it. You know all of these things are happening intra-bar, and your sell limit is waiting for the trade as it comes down. And this gave us 2 or 3 ticks of heat, and then just moved down nicely. Here's another one. This was a 69 tick trade. And again, it's not the 69 ticks that's important. It's the fact that the entry was powerful enough to get you to your first target. That's what's important. If that happens over and over again, I could show you 69 tick trades and 59 and 40 and 30 tick trades. They are irrelevant. What is important is the predictive value of any given signal in getting you to your first target. Because in order to be a successful day trader, swing trader, options trader, what you have to be allergic to are losses. And you will not get a loss if you hit your first objective, whatever that objective may be. Now, we have recommended objectives for trading different markets, for crude oil, for gold, for the Russell, for the NASDAQ, the Dow, for trading the Forex markets. Obviously, for stocks, it's a little bit more difficult, and also for options traders. But you want to get your first objective or first target. That's the area that provides you with a profitable trade. After that, you're in the money. Any additional money you make, and you hope to make a lot of additional money, is just adding on. And if you make enough first targets, as I mentioned, eventually you'll get your second target, your third target, and you're going to get your big runners like the 69 tick trade. And I didn't want to put the 69 tick trade up to wow you. The fact of the matter is, a 7 tick trade is just as powerful as a 69 tick trade. If you get your first target enough times, you're going to get your runners. Now here is another entry we have, and I don't want to overwhelm you with entries. I want you to know that if you evaluate the software, we have an extensive amount of mentorship videos which are going to teach you the system, and you're going to know it cold. And in addition, it comes with a lot of personal education, which I'll go into later. But this is the basis and core of our auto trader, which is in development. And I'll talk to you about our auto trader at more length in a little bit. But this is, we call this our strategy entry. Because the logic of this entry is not based on one parameter. In order to get this entry, and I had a couple of those today, and they were terrific entries, because one, the 15 must be above the 50. 2, the right line trend line must be green. 3, the slope of the right line trend line must be 20 degrees or greater. 4, the candle can be no more than 5 ticks from the right line trend line and no deeper than -2 ticks into it. So it's telling you that you have a structural setup that's acceptable, the 15 above the 50. We have a nice trend because the slope is up, and we look for a pullback. Remember, we like to trade regression. We don't like to chase trades to the upside. The only chase we have is the 3-line break of the 50. We get a nice pullback into the 15. That's where we like to trade off of, that modified 15. So let's do it every single time and push our predictive probability of a win up to 90%. This was a terrific signal. It occurred intra-bar, and you can see it signaled a great trade. Some of them go 7, some of them go 8, and again, some of them go 30 and 40 ticks. But its predictive value for a first target win is exceedingly high. Now, I wanted to show you that you can get multiple signals on the same candle. Here's your move to the upside. B flashes, prints, audible signal, C candle comes. It also comes with a strategy call. Slope is acceptable. Market structure is acceptable. So this is a great chance of getting to your first target. Then we get another C candle. This one has, again, multiple reasons for giving us a first target. We have order flow asymmetry on the B. We know that a lot of people are short, and they're short at the bottom of the candle. So we can use their failed counter trend attempt to move the market down, leverage that in our favor, stop them out as they're stopped out in this engulfing C with a strategy entry that helps push this trade to the upside. Now, a little bit about our money management. And this is just really for futures markets, although I consider the Forex markets to be the same. I should have put Forex under momentum markets. They're certainly not rotational markets. But rotational markets are the ES, which is the S&P E-mini, bonds and notes. And on those instruments, we trade a three-tick range bar. Our first target is off at 3. Our second target is off at 5. And we take our remaining 20% of our contracts off on a 2-tick trailing stop. So we really keep these trades very, very tight on rotational markets. And I always recommend to take 60% of your contracts off at your first target. For momentum markets with like gold, crude oil, the Russell, the NASDAQ, the Dow, Forex markets, again, you want to trade multiple lots. I recommend a 10-tick trailing stop on an 8-tick candle because the candle's 8 ticks. You're in 1 tick above, and your stop should be 1 tick below the wick or the low of your entry candle. 60% off at 6 ticks, 20% off at 10 ticks, and then 20% off on a trailing stop. Now, a lot of people ask me the question, can I trade one contract? And my answer, I know someone's going to ask me that because somebody always does, and the answer to that is, if you only have the money in your account to trade one contract, then you shouldn't trade. Because I've looked at equity curves based on a trading strategy that gets you between an 80 and 90% win ratio, and you're just going to break even if you trade one contract. You can trade 2, but it's very difficult to make money with 1. So I do not recommend that you trade any market with a single contract. So what do you need to become a professional day trader? And obviously you do need outstanding software, and that's going to do 90% of the heavy lifting. But I think you have to understand, and I think everybody does, that if you want to buy on the blue dot and sell on the red dot kind of system, it's not going to work because these systems don't respect market structure. They don't respect fractal analysis. They just don't do enough. And you have to develop some degree of pattern recognition. Remember, you have to outfight the smartest and, in many cases, some of the richest people in the world who use the most sophisticated trading systems that are out there. And you have to take money out of their hands. Now, actually, what we're trying to do is I believe that by trend trading, we trade with the institutional players. The institutional traders set up the trend. And we never want to counter trend trade. Those are the people we want to catch in those failed counter trend moves. So we don't want to be the people who counter trend trade. We want to trade with the institutional players and unfortunately take the money off the other small guy. But if we don't take the money off the other small guy, somebody else will. And you can only do this with a software platform that provides you with an edge. Now, I really think that if you decide to evaluate the software, of which 10% of trading is definitely discretionary. I mean, you have to learn the system, understand how the market sets up, and that is why we provide you with extensive video support. You get a lot of mentorship with this with the software. You get 4 2-hour sessions, either group or personal mentorship programs, and we really strongly support our software. Now we have 2 packages, and I'll show you what those are. Really, probably 99% of the people who are listening to this lecture or this webinar have enough information where they don't need the expensive one. The expensive packages for personal mentorship and really for people who are just entering the markets, want to become a professional day trader, and really don't have a really good idea of exactly how to day trade. They don't understand even maybe necessarily what a moving average is, what's the best type of candle formations to trade. That's really a soup to nuts program. But for everybody, what we do is a once-a-month ongoing educational seminar, which is free to everyone who owns the software. And in those monthly sessions, we have chat open. So everybody talks to each other. Everybody exchanges email addresses and phone numbers. We want people to communicate. We don't wall you off from your fellow right line traders because everybody has a lot of good information. And people have good ideas. People see things. You want to see what their performance is. So during these months, we do during those educational monthly seminars, and they're really kind of like group discussions. They're like online, coffee hours. And we never ask you to pay for boot camps, seminars, or lectures. I mean, I believe that if we can't provide you with enough educational material and support to become a successful day trader, we're not going to ask you for money for extra money for boot camps and extra money for this and extra money for that. In addition, we support the software. We do lots of upgrades, and we provide you with all our new indicator packages for free. Once you buy the software, essentially, we're never going to take another dime from you, because I believe that these are all yours as part of becoming a member of our trading family. I don't look to take any additional money from you. Like I said, there are 2 packages: the Right Line Trading Order Flow Exact Entry software. There's video tutorials. There's group mentorship. That's $29.99. The expensive package really is best for those people who are just starting out, who really want to get a good feel for how to trade the markets and want to become a successful professional day trader. Now, as a promotion for those who have attended this webinar, first of all, we're giving a discount of $500 on any software package. Now, we're creating a link on our website that's going to say for webinar attendees only. The regular purchase price of $29.99 is going to be there. But if you hit that link, that will allow you to purchase the software for the $24.99. Again, only for the webinar attendees. We're going to give you a 7-day money-back guarantee. Schedule your first mentorship 2-hour session during those 7 days. Evaluate the software. If for any reason, that's going to say it on your invoice/receipt, that you get a 7-day money-back guarantee, no questions asked. You don't like the software, you don't think it's as effective as I am saying it is here, then you just let us know, and we will refund your money in an hour, really quick. Again, you have to go to the webinar attendees link only in order to get the price and to get the 7-day money-back guarantee. Now, we are at www.rightlinetrading.com. At the bottom, we have a contact us page. If you have any questions, we have an 800 number if you want to phone us. We're here to answer questions anytime. Now, this is just my little tired of chasing your blue tab, the blue dot, and selling the red dot. And really, if you're tired of buying expensive software that doesn't work, I really, really encourage you to try our software. You're in it. You buy it with no obligation, and I think that if I believed you're going to return it, I wouldn't make the offer. I think it's going to be a keeper. I think you're going to use it, and I think you're going to be able to trade the market successfully and become a successful professional day trader. Now, what I wanted to do now really quickly, because I want to leave time for questions, is simply show you the trade setups that we had today on crude oil or the Russell. Do we have time for that? Yeah. Okay. If you just hold on 1 second, I'm going to put up the trader. Okay, sorry, just hang on 1 sec. Just loading the trader. Okay. Just another 30 seconds, and we will have it for you. Okay. Now, hopefully you can all see this. I just need to scale it a little bit differently because I cannot scroll. And let me change it back. All right, let me see if I can scroll backwards here. Here we go. So we start trading crude oil at 8 o'clock in the morning. And throughout here, there is no trade setups at all. Remember, in order to trade long or to trade short, we need the 50, we need the 15 above the 50, or the 15 below the 50 for short. Those are our bread and butter setups. Now, on this particular C candle, this came with so much power, and this is the 10% discretion. You have a C engulfing the B. It also comes with a 3-line indicator signal. It also comes with order flow asymmetry. So because the modified 15 just has not crossed the 50, it's red, it's heading down, this is your first trade to the short side. And this is your first winner. Now, we do not trade second pivot Cs, ever. This is more of a detailed description of the system, but we never take the second C in a trend, only the first C. So the second C is not tradable, and we never take them, not just because the C is a loss, but because a high number of them are losers. So we trade the first C only. Then we get our gorgeous pullback to the modified 15, below the 50, below the 15, and this was about a 35 tick trade. So we have two winners, and these are very, very easy to spot. Here is trade number 3, your C candle with a strategy call right off the modified 15, engulfing the B, and there you go. Now, you can take the second C because it comes with a momentum signal. You're not just trading a C, you're trading momentum that's moved sideways. Remember, you can trade momentum to the upside after a red candle, and you're in for a short trade. And then it happens again. pull back, momentum signal, and you're up again. So you have, 5 trades. Now, we don't trade short above the 50, and we don't trade long below the 50. So everything else that happens is not tradable. Here was a trade that I took short. It was very aggressive. The 15 was way above the 50. It went 5 ticks, not 6. Never hit my first target, but I moved my trader to break even, and I did not take a loss. Here's the C to the upside that I did take. You can see you're above the 15, above the 50. The right line trend line is green because you have it's a little bit flat, but this went 8 ticks. There's the strategy entry. Pullback. Now this was a momentum signal I didn't take. It wasn't deep enough into the modified 15. And that's all the data I've got actually. And but I had 5 or 6 winners in a row. I took one trade on gold that was a loser. So that was my day. And I just want you to know it's that simple. It's just simply not a difficult system. And like I said, 10% of it is proprietary. Is discretionary. And if you'll notice here, here's your perfect entry. 3-line break, strategy call, comes down, comes back up, right into the modified 15. There's your strategy entry, right back down. We never trade a yellow trend line. And I could do this for you for days and days. And you would see that if you stay conservative, you're going to wind up with an enormous amount of winners and be hard-pressed to find a loser. So now at this point, I thought I would just open it up to questions. So let me just take a look at, I'm going to take a look at the chat window and see what questions that you may have. Hold on one second here. Tom, you asked about the auto trader. Hold on one second here. Let me just set this up. Here's the deal with the auto trader. I'm gonna start. Juanito, we do have an historical performance. The thing is, though, is that I have to switch over the data. Our historical performance is simply in tick numbers, and there's a reason I purposely do not post tick numbers on the website because the number of ticks you make in a trade tells you nothing about the equity curve generated during the course of a day. And what we need to do is provide you with a lot more information. And right now, honestly, we don't have the time. But today, I made about 70 ticks. But the amount of profit I make depends on the number of losses I get. So we do have an historical performance based on tick number. And I can tell you, we haven't had a negative tick day in weeks. But we have negative equity days. So that's something that I have to look into, and that's really basically the most information I can give you about that. Now, the price includes the auto trader if you buy it before we release it. And we're going to release it, I believe, right after Thanksgiving. And I just want to be honest with you. I've always told everybody who owns Right Line software that any system upgrade that we get is going to be included in their purchase. If you purchase it before December 1st, and I'm just giving that as a general date. It may be a week later, but we're close to it, and the equity curve we're generating off the auto trader is quite good for crude oil. We haven't looked at any other markets, but if you do, you will get the auto trader for free. Afterwards, we're going to lease it. No, Ride. These are not. There are no market entries and exits. They're buy limits, sell limits, and fixed targets. I have my the Superdome on my NinjaTrader set for a 6-tick first target on my first 3 contracts, for a 10-tick target on my second. My 10-tick trailer engages when I hit my first target, and I trail the entire trade by 10 ticks. So everything is fixed. And once I'm in the trade, I rarely touch the trader. Once in a while, like I did today, the trade went 5, it went 4, it went 5, it went 4, and I was looking for that 6-tick first target, so I slid it to break even. And I'll be darned if it didn't come back and take out my break even. But I tell you, for every time that I do that, then the trade runs 25 in my favor. And I always want to give myself a knock upside the head. So I rarely touch the trade once it's engaged. I let the Superdome do the work. The webinar will be archived, yes. No, George. I do not set. I do the profit targets are all in NinjaTrader. They're all on my Superdome, and whatever platform you trade, we're only set up for NinjaTrader, but everything should be preset. You should not. There's nothing. There's no mental profit targets. Tom, we will give a second license for free. We've always done that, and we will continue to do it. If you want to trade 2 computers, we will give you a second license at no charge. Angelo, I should have done that. If you call my office, I will show you. And the reason is I need to set up a template, and I would need from you, Angelo, what time frame. I will set the template for you on any time frame you want. 4-hour bars, daily bars, 2-hour bars. I'll set the template for you, and I'll show you an example of a swing trade. I've posted 2 swing trades here on the TradingPub. One was a crude oil trade, and one was a Russell trade. They were both based on 4-hourly bars. Thank you. That's our number, Morgan. I appreciate that. We don't have it formatted for Ameritrade, Thinkorswim, but if you want to take your signals off of NinjaTrader and then use them on the Thinkorswim platform, you can. Yeah, we only have it formatted for NinjaTrader at the moment. We only have it written in C#. We don't have it in any other in any other language, and there's lots of reasons for that too. NinjaTrader has the best encryption software, and I just believe it's a really good platform. Eventually, we'll expand it out. I really like MetaTrader. I like Sierra Charts. We're going to move on, but right now, our number one priority is to launch our Auto Trader, and once we get that launched, then we will move out. Jan, you know what? I don't. Honest to God, I don't mean to make you do extra work. I don't have the time to do it, but if you call my office, I will show you the losing trade. I don't hide them, and I just want you to know one thing. You do not have to open an account. You can demo Ninja. I want you to understand, I am never going to represent to you that this platform is going to give you 100% winners. The trade that I took on gold this morning was a perfect setup, and it ran through my entry. Gold is very volatile. It's tough to trade. You're right, and I'm not. I want to be the last guy who's going to say you take a perfect C candle close to the 50, right off the 15. You're always going to get a winner, because you're not always going to get a winner, but you're going to get close to 90% of those trades winners. And what I look for on a trading day is to take a loser. I figure I'm going to take one loss. Today I had 5 winners in a row. I had 1 loser. I had 5 winners in a row, and then I had a scratch trade where I moved that trader to break even, and I got out, and that was my day. So are there any other? I don't know if I'm running out of time. But if there are any other questions, I'll be happy to answer them. I just want you to know that during the evaluation period, you can return the software. Not a problem. I really want to give you the opportunity to evaluate it without any risk. And remember, you will get a 2-hour mentorship session, including the proprietary videos during that time. Morgan, thank you so much for giving me the opportunity to come here. It is extra, Gord, and it's stuffed, and that's why we're not giving out any freebies right now to there, because I can't handle any more. You see setups all day, Robert, all day. David, call me about the trading room. It is so full that it's very, very difficult to give out a free trial. If I gave it out and there's 600 people in here, our room would top out. And that's why I'm giving you, really, that's why I decided to let you see the software and have it for a week without any risk. And we will give you your money back fast if you don't like it. You know what, Jimmy? I don't want a bigger room. And the reason is because I have people PM me, private message me constantly, and it's too much to handle. And I don't want 400 people or 300 people in that room. Yeah, I mean, I think big rooms are tons of trouble. I don't really need it. Listen, if anybody wants any more information, wants to see the platform in action, they can call my office. I'll set them up on TeamViewer and I'll show it to them. I believe that the more information you get, the more you'll like it. It's $24.99, $2,499 for everything. Morgan, thank you. I'm going to sign off. I don't want to be, I don't want to take up more time.